Alright, what is good? So we are 15th of August 2026. It's a Saturday. We've finished off a very chaotic, mismanaged, and I wouldn't say an unsuccessful week because there is quite a lot of value in what I have done and what I have achieved. But in terms of the monetary value and the actual plans that we're following, we still need a lot of work. And it's a lot of work that I really need to put my head just to focus because we're losing out a lot of time and wasted energy, wasted potential within the market. So before I do one big massive backtest session to identify opportunities from Monday through Friday, I wanted to take you through Friday's trading opportunity, which hasn't yet been confirmed because price action still hasn't tapped your targets. We've decided we're most likely probably going to get rid of risk off unless it works out continuously. Like in this trade position, I probably wouldn't have a risk off area now, but previously I would keep it here. It makes sense why it's here. It makes sense because you're going to get retested to push down, so price is doing exactly what you're expecting it to do. But if I want price to copy, this is a textbook play here on Friday that I didn't take. I missed this trade opportunity because I wanted the highs of the previous candles to be grabbed first, which is your challenge of the day. So you prove to me that you can break the highs of the day and you still reject them. We're looking for a sell. But for me, the textbook play position is as follows. You've previously had massive range. The daily time frame isn't giving you so much confirmation of where it necessarily wants to go. You've already cleared the bottom wick. You've already come down and grabbed liquidity in this area, so you've technically already satisfied it. Your 4 hour time frame tells you the same story. As Asian came down, it opened up, it gave you the bottom wick, price actions pushed you up back in the range. 4 hour time frame now wants to reject. So when you're looking at rejections, taking a trade entry like this, we look at the context. So if you're in a massive range, you've already grabbed liquidity in these areas. What is price next going to do at this area? You previously had fake out said before it's a common level of rejection. We're obviously going to start looking for ways to take the sells, not because the daily time frame looked extremely bullish at the time, but because your 4 hour and your 1 hour narrative already started to give you a confirmation. When you go down to your lower time frames, you already started to see price action is already giving you confirmation. Price action wants to come down. The structure is shifting, the structure is changing. You want to be in this kind of position. Everything in my playbook made sense. Your daily time frame, when you zoom out, still looks like you are bearish. There is still a strong potential, even though you've already grabbed the bottom wick. Price action will say it still needs more momentum to come down and give you the rejections. You've already grabbed liquidity to the upside. We've previously seen price action reject at this area before. This area here is a common rejection area because of bearish price action. You're expecting retests to this area and a small rejection. So when you build the context all towards the sells, everything makes sense. You're looking for the entry, you take break of the lows, you take the flip, you take the wick, whatever it is. I wanted to see at this price point a break at the daily highs in order to validate me into this position. Unfortunately, we didn't get that. You came very close. You came to match that level, but we just didn't quite get what we wanted. So for me, this trade opportunity, my entry probably would have been break of the low. If we had a break of the highs here, I'm looking at break of the lows as my entry point for price action to push you down. I'd like to see what happens with price action here because Monday open can tell you a completely different story from what I'm saying now. But in terms of what I was expecting, this is a textbook play. I can't say that it's a complete missed opportunity because we didn't get validated into the trade position. I needed a break of the high, which you didn't get. Now, our time is moving on to backtesting since Monday. So when we look at Monday, the 10th, we'll go and mark out where the beginning of Monday was. We're just somewhere around this area here. Price action since Monday. Monday gave us something. You look on the day first, what are we printing on the previous day candle, which is here. Okay, price actions come up from a support. You're looking to continue the wave. 4 hour time frame was consolidating, so for me, I would be thinking you need liquidity, you need a strong grab of it in order to challenge some of the highs. And the 1 hour time frame on the open came down, not necessarily a specific level down here. for then price action to rally, give you some form of rejection at this area. I'm not too sure if I really would take this. As price action pushes up, you're looking at this area here to be your first layer of rejection. I would probably require price action to print up a little bit further. This is 9:30, so Asian Open came down, you're printing rejection. You've already given me at 8 o'clock some form of rejection there. 1 hour time frame, the 30, the 15. 15 gave you a little bit here. 7:45 came down, retested, swiped highs. This could be, it's been a very long time since I've done a range 2 play. That price action at this area, when it breaks the lows, you're looking at price action to come down, give you that as the rejection. You take the entry, so this is the fake out. As price comes back to the retest area, right here, you're looking at, okay, fake out, you can continue to take break of the lows. You probably have a sell entry at break of the lows on this candle right there. Risk is going to be set above, so it's at 75 ticks, and you want to target some of the lows here. So you've got lows there. It's probably the first opportunity I get. So 1.97, not perfectly 1 to 2, but it's very close to, and that would have come out at 147 ticks. So this would have been a pretty good trade to take advantage of. Since the open, you came down for Asian, you're swiping up. You have the first possible rejection point. This counts as some form of liquidity for a range 2. So you're not really going to target too many lows. And this is a moderate size. So I think something like this is something we can replicate for the new week, for sure. But unfortunately for me, I think it's just really lack of focus and lack of the, I wouldn't say motivation, but the lack of discipline and initiative to really go in for these higher detail, more specific trades, entries. We had a rally on price action. You would have price give you a pretty solid level here. You've taken liquidity and you've completely pushed up. 315, you want to take rebreak at a highs here is also very possible. Take it up to the break of these highs up here. That is your next rejection area. So you can, even if you miss these sells, I believe I did put this in my notes too. We go to here, Monday. Yeah, well, there you go. That's what we missed, and that's what I just went over. And now price action is giving you the fake out. You could take rebreak at the highs to continue the wave up. So that's the same thing here. When you look at the hour time frame, what are we seeing? Price action pushes you down on Monday, comes down, gives you no bottom wick, so you're already expecting there could be something here. You've had a replica here on price, so you're looking to basically copy the same thing. You've got liquidity, you've had the fake out, 30-minute time frame gave you, okay, closure above here. I probably wouldn't be looking for an entry on the 30. The only realistic one I can say is the 15 time frame. The 15 time frame giving you the closure above, that would be your entry point. I'm not so certain. That would be 1 hour continuation up, so you can build bias on the 1 hour and the 4 hour time frame. The 4 hour time frame at that time, this is where it gets quite tough when you're backtesting on this without a tool. This is at 3 p.m. so you've just had an open on the 4 hour candle. The 4 hour candle would be this one here at 2 p.m. Price action comes down first, grabs the bottom wick, so that context makes sense. It comes down first, grabs the bottom wick, 245. So the 3 o'clock open, you should be taking buys based off that break of the high. Stop loss below the fake out lows, which is somewhere there, and then your stop loss around about there. So currently you're at a 1.37. It is not an ideal position. Even a 1.65 if you're being very strict here. It's not an ideal position. And this is where it gets quite tough to enter a trade position that you know will play out, but your risk to reward ratio doesn't really quite make sense. I know that I can only target these highs. If I want to push it, you can make it a 1 to 2. I typically want to see the first area of rejection, which is somewhere here. So I don't I really want to kind of avoid being the type of person to just have a fixed risk to reward ratio and not really care about the logics of price, because price point tells me rejections start at 4358, and I've had a lot of experience in the past with price action, if I'm being too ambitious, never hits, and it just stops at the first point of rejection for us to lose out the entire trade just because we wanted an extra couple of pips to satisfy my risk to reward. So there's a lot of room for improvement and for change to making sure that we can work on these things. But overall, we know that entry requirements work. We know that current range liquidity, mirror, narrative, breaker lows and highs, these all work. We have range 2 that I haven't even said in such a long time, and I've completely forgotten we've had it, so we're going to utilize it again. I don't know if it is a good idea to remove risk to reward because we have a good entry. Because risk to reward is the way you manage your risk. It's the way you manage, if you have a fixed risk to reward ratio within how many trades. If you lose a couple, it's fine because it's a fixed risk to reward ratio. You know roughly how many ticks you're risking, and you're always going to get a 1 to 2, if not more. So for me, I don't ever want to go and put myself in a position where I'm doing something that is less than a 1 to 2, less than a 1 to 1, and perhaps even negative risk to reward ratio, like I did at the start of my trading journey, and was probably one of the, I wouldn't say worst, but questionable decisions that I made, because I still don't think I'm in a position where I am able to risk manage aversely and appropriately when I'm in drawdown. I used to stack when I'm in drawdown. Now I like to go risk off and leave the whole thing to run. So it's a complete different model of trading, which I don't want to dip my toes back into. Therefore, I'm very hesitant in changing my risk to reward ratio requirement. I think what I do is just leave everything the same, leave the risk requirement the same. If I find myself in a situation like this, where I know all of my entry requirements are ticked off, then we just try our best to leave it at the lows. And if we know that it's a textbook play, I have to make the exception. So for me, it's a 1.68. But I know that I'm very certain this is the first point of rejection that I should take this trade. I think for the time being, let's leave it at this. And if it doesn't work, we'll have to reinforce 1 to 2, because I feel like changing this is pretty big and pretty substantial, as much as especially when you increase your lot size and increase your overall risk. So let's try this just so we can get a higher volume of trade requirements being entered. For me, it doesn't really hinder too much of the trade quality. I think if we dip below 1.5 risk to reward, it's a little bit of a red flag. But if we can keep it between 1.5 and 2, then I think that should be appropriate enough for us to take a reasonable amount of volume and frequency of trades within the week, and hopefully see enough growth from it, because we can easily recognize price point structure makes sense. This is only based off of one trade, by the way, but actually taking action on it. I find myself sometimes making the judgment and the, not assumption, yeah, I think judgment is the most appropriate word, that if I find a position like this, I try my best to get in, I find a good entry, and then just realize it's under 1 to 2, then I disregard it completely. Then I hesitate to enter because I know that the price point works, but my risk to reward doesn't work. And then I force myself to find a better entry, but then the better entry actually is less optimal. You get more drawdown, you have higher risk, and sometimes if I don't give my trade a lot of space, it will wick me out for price action to eventually rally once it's grabbed everything it needs to grab. Where if I had my original entry order at that proper position, you just leave it and it will go. I need to get to the point where we can consistently see something. That means consistently hitting a good entry. That's it. Right now, I think the point is I need my volume and executions to go up, but not force trades, but validate them and miss less opportunity. Right now, I'm missing too much opportunity. So if we can just get those two things nailed down next week, we should hopefully start to see increase of volume for the frequency of trades, which also coincide with the validity of the trades. Last week, we didn't really do too well because the frequency of trades for me didn't really make too much sense. If you look at, we started on the 10th, so we had 11. You've just had a break even, and a loss. And the loss wasn't to plan because we basically went against the original bias just because we thought we were going to outsmart the market by continuing up. But we actually originally planned for sells, but we took buys instead because we were too impatient with the market and I was fed up. So, like I said, you keep your head in the correct areas of focus, you reset, you restart, and you refocus. That is all you need to do. Recognize the ranges. You find your requirements. If you're validated, you take it. 1.5 to a 2, risk to reward. That is it. That's what I'm changing. I think Tuesday, Wednesday, Thursday, Friday session also kind of gave you quite a few opportunities which we didn't act upon either, which, like I said, is my fault. I'm trying to find where my journal has gone. There we go. So that was Monday. Tuesday, consolidation day. But I think here, really, really greatly managed trade. I think I got stopped out at break even. I got stopped out at break even on this trade position, and then I think price action, instead of rallying, it did end up hitting my stop loss. This was on the 12th, and this would have hit a stop loss for minus 119 ticks. So even with the risk off advantage areas, it does help in a lot of situations. Opportunity one for Wednesday. I think Wednesday's trade also hit break even, which was extremely frustrating. It hit break even, it came all the way down, and then it came down to your stop loss. So again, I think from the data, actually keeping a risk off makes more sense. 49 pips loss on Thursday, which was, again, my problem. And I put my split here because I didn't want to forget temporary for this week. So yeah, if you want to see my split, that's my split. But for this week, there was, I know, a lot of opportunity. I keep repeating myself. But I just have to get better at utilizing the entry model and having a preparation and a proper plan before I actually enter the markets to know when I'm managing, when I'm moving risk off, if I need to move risk off, have the proper levels marked out, and continuously just restart and refocus. If we can just do these things, please, we should have more of a successful week next week. The monetary value doesn't matter. I've said it many times to myself. The things that matter now is just getting back onto understanding simple price structure, take advantage of it, replicate it, listen to the market, listen to you, and have that clear entry model. If we can just do that, hopefully we can see some more results so we can slowly build that foundation up again.